I'm going to play a little game with you. All you have to do is say back one word, agree or disagree. And I'm going to hit you with a couple of questions, or sorry, statements. And they're not coming from my own belief. I just want to ask you to agree or disagree. So, based on the point you just made, I'm going to make a statement. Here we go. There are some 100 baggers that have almost none of the attributes you defined in your book, apart from being small to start with. Agree or disagree?
Um, well, I would say agree if you, because again, my study excluded exclude a lot of penny stocks and things like that. So if you're going to
Yeah.
include those, certainly those did not exhibit any of the attributes that, it was just luck. Some guys went out and found some huge deposit and it became a mine.
Yeah.
That's something that's
Yeah.
not going to be predictable within the framework that I put in the book. Or if you have a small biotech company that has no revenues and is really just a publicly traded science project, and they hit a drug that then becomes, it's bought
Yeah.
out and then
Oh, yeah.
becomes a
Yes.
commercial
Yeah.
product. That's not going to be predicted within the framework of the book. So
Okay.
yeah,
Well,
I mean,
that
what I was
gives me
looking for was something that could be predictable within that, but there's certainly money
ah,
baggers that.
that's a very important nuance. So let me then hit you with a related agree or disagree. Um, when screening, exclude biotech and financial companies. Agree or disagree?
Well, for me, I'm going to say I agree because my personal preference, I don't own any financials, meaning banks.
Yes, exactly.
Right. And I'm not a biotech guy, but perhaps if someone has some expertise in that area, I wouldn't say you don't look at biotech. Uh,
Mm.
Banks are interesting. I mean, the thing with banks is I also run a concentrated portfolio. Right now, I have 11 stocks in the portfolio, and I don't intend to have more than, let's say, 12. Would kind of, for me, is kind of the top number. So, the problem with a bank is banks are inherently leveraged, and you could always
Mm.
have some surprise. I mean, we just went through it. Look at, Silicon Valley Bank was a top performing bank for so long, and then, zero in a matter of a few weeks.
Yeah.
Signature Bank, every once in a while you have these banks that just, come out of the blue and you get whacked. So I
Yeah.
think if, for somebody running a concentrated portfolio like I am, I don't want to take that sort of even whiff of existential risk.
Oh, I get that. I have gone through years of developing a system, and I just at the end of it all, I avoid fashion, pharma, and finance. No, it's I have an aversion to it. I don't say no. Like I am a fan of some financial businesses like SoFi
Sure.
or some pharma businesses. Quite
Right.
interested in Recursion Therapeutics at the moment, but more to the point because Nvidia invested heavily in them and said, "Hey, here's a whole pile of chips. Go do your thing." So there's things that I can look at and assess, but
Yeah,
I'm with you entirely. When the raw material of a business is money, when money goes in the back door and out the front door, it's a far harder business to understand how's the value added in the middle bit. For me, it's always been a little bit like
I
black
agree.
magic.
I agree. And the other flag is if the business really only works with a lot of leverage. So, this is
Yeah.
a problem too. I don't own real estate in the fund. I mean, because real estate only works really well as an investment because you can put, a big mortgage on it, and then you get this
Yeah.
huge leverage effect to your equity.
Yeah.
And of course, lots of people have gotten wealthy with real estate. So, but again, so this is a personal preference thing. It involves a lot of leverage. But you mentioned finance companies. I mean, there's a lot of finance companies that operate the same way. They're skimming and they're making a very little narrow spread or margin, and it really only it works as a business, so they get an ROE of 20% because they've leveraged it, so much.
Have you noticed attributes common to 100 bagger apparitions? Companies that on the surface look like they're going to grow, but actually turn out to be phonies. Like where you went, oh, I was always keen on Acme bricks and then Acme roads,
Right.
and then all of a
Well,
sudden something
I don't
just
know if I
didn't
would
work.
say phonies, but I would say like, some companies that show you could run into a company where you have really good earnings growth, for example, but the company requires so much capital to produce that earning growth that the actual returns on capital are very low, and the market's kind of smart and eventually sees through those. And sometimes they can be tricky. You can have companies that appear to grow 20%, 30% a year, but then they're spending so heavily on say marketing expenses, and then as soon as they shut that off, then the business starts to
Mm.
roll over because of churn or whatever. Like so there are some traps like that, but I think as long as you don't get overly enamored with just earnings growth, and you do a little analysis into sort of what produces those earnings and the sustainability of it and the kind of the true underlying economics of it, you should be able to avoid those traps.
Okay. So when you look at, again, let's go with another agree or disagree. When you look at the
Yeah, I like
parameters
that game.
behind, okay, right, here we go. I'm going to make another statement. So when you look at the parameters for finding a potential 100 bagger, the only real risk factor is its size. Apart from that, what we're looking at is quality companies with great momentum. Agree or
Yeah,
disagree?
I agree. Yeah, I mean,
Mm.
I agree in that you're really only looking at quality. If I understand it right, you're really looking at the
Yeah.
quality companies, and size is not as important. Is that what you're saying?
Yes, exactly. Exactly.
Yeah. So because
But there is a
this is
two.
something a little different.
Yeah.
I originally wrote the book, I said like 300 million was the target. I kind of to guard people to really stay small. But I
Mm.
think over time, what I've learned is that that kind of is too limiting. Like you could run, if you run into a business that's a billion or 8 billion or 10 billion, and it checks every other box, I wouldn't let that go just because it's a $10 billion market cap. Now, there's an extreme on the other side. Obviously, Apple, you're not gonna,
Yeah, yeah.
I wouldn't mess with. So I think there's a more of a window there than I allowed for in the book.
Yes. Okay. Totally agree with you there because I have spent quite a lot of time recently trying to reconfigure my thinking on what is a small cap, what is a mid cap. I kind of grew up thinking a small cap is like 200 million to 2 billion, a mid cap is 2 billion to 10 billion, and so on.
Yeah.
But your point now is so on the money because we are in the age of several multi-trillion dollar businesses, and 10 years
That's
ago
right.
you couldn't have convinced me that I was going to
No,
live to see $1 trillion business. And now
me neither.
Apple looks cheap. How on earth can a multi-trillion dollar business look cheap? So when you look at a $10 billion business, you're like, wow, this thing is only an acorn.
Yeah, exactly, exactly.
Okay,
Yeah,
let's
and
do
plus,
another.
these things we're talking about. I mean, it's hard to find a really true high quality business that hits all those things. So again, you find one at 10 billion, I wouldn't worry about that
Yeah.
and say, oh, it's too big, because like you said, you don't know. But if you just focus on that underlying engine, I mean, it's amazing. I mean, even if you look in the back of that book, I have a list of all the companies that are 100
Yes.
baggers. There are a lot of humble businesses in there that you would never have guessed
Totally.
would be, hundredfold, but yet they continue to compound 20, 25% a year and get there. So I'd focus on that engine, that compounding engine, not worry too much about size